Hey folks, Dave Nadig here, financial futurist at Vettafi. Here's a quick video I did with Eric Golden, who's now part of an outfit called Canopy, which is doing crypto SMA accounts. I reached out to Eric. He's been running Web3 Breakdowns, which is a podcast on everything that's kind of cool and interesting in the metaverse, Web3, DeFi, crypto space. He's also really focused on digital assets as something in advisor portfolios. We get a little over our skis, talk about whether or not crypto is going to be the currency of the AI apocalypse and things like that, but I think we have some fun with it. But hope you enjoy this. Eric's a great guy, and I'm sure we'll have him back. So Eric, I talked to a lot of advisors, and honestly, for like the last 4 years, I was getting tons of questions about like, how do I get into crypto? Is it where I should put all my money? Should I be spending millions of dollars on NFTs? And then sometime about mid last year, the phone stopped ringing. And there is this vibe in the advisor community, at least, that like crypto is dead.
I don't think crypto is dead. It's definitely been challenged. As an emerging asset class, I think of it more as a frontier space. It's definitely a high risk technology with a lot of volatility. The prices move around a lot. And like a lot of things at the end of zero interest rates, a lot of asset classes, especially the risky ones, got pushed to incredible levels. And when that happens, everybody wants to know, how do I get into the next thing and what are we following? However, I do think that one thing from other cycles you see is it also leads to a lot of investment. A lot of people try stuff. So for many people, they weren't interested in blockchain technology, but they were interested in baseball cards.
Right.
And they started trading, NBA Top Shot digital moments, or people started collecting art that maybe some had collected art, some hadn't in the past. What that did is expose people the technology of what crypto could do, what a decentralized storage system is possible, but it just sparked a lot of imagination. And so yes, the money got people caught up in a mania and a boom, and that's what kind of happens. However, I don't think digital assets are going away. And I think that it's a serious conversation about how should I be exposed, how should I be positioned? If I want to have exposure to this asset class, what should it look like?
But it does feel like we have to acknowledge something shifted. I would say 2 years ago, I was cautiously optimistic that we would get a slow, plodding regulation of crypto in the United States, which would allow enough interesting things to happen that we would have a US crypto industry. I no longer believe that. I believe that we're now fighting against a regulator, and really everything has to move offshore. You're a big investor in companies and projects that are playing in this space. Has everything just moved offshore? Is that the end state?
That is the consensus, that if you're going to start a company right now, building one in the United States like we are is not exactly the right play, because it's a lot easier. I've met with people from other countries who have said, please come here, what can we do to entice you? So there's definitely a drive and a pull away from the US, both to Europe, to Asia, where not just emerging market countries, but developed nations are saying we want to have a foothold here. As has happened through every cycle. Anytime someone tries to break into Wall Street with an idea, there's always a play with international jurisdiction games. I think that your view of what crypto, maybe I'm more optimistic now and I was more pessimistic before, so we were probably back in the middle. Well, it's just that, coming from a large firm like Fidelity, dealing with the money market reform, I saw what the banks and the regulators do when a bad thing happens, and it is intense. The regulation is fierce.
Yeah.
It always is a reaction to the last war, and what else could it be? It's really hard to be a regulator and say, this is what's going to happen, we're going to stop it. But after an accident happens, after the crash, whether it was a great financial crash or what we saw in crypto in 22, the regulators come in and say, we have to do something. Now, in this case, we also have a regulatory fight on our hands for a land grab. This is an undefined asset class. So when people say, the security laws has been around since 1940 and they're good enough, the issue is that what that really means is every time we create something new, someone gets a no action letter from the SEC to let their product work.
Right, exactly. That seems insane.
It does seem insane. Why is a term loan not a security? Because a bunch of bankers came together and said, we don't think it should be because we don't want to have to fill this paperwork. So you end up with this patchwork of regulation, and it doesn't really work when you're talking about such broad adoption from people. As bad as the crash was and the regulator showing up, I do think we need to get to resolution, as opposed to leaving America in this gray big question mark and all the other countries starting to say, this is how you can do it, come work here.
I agree with you. We need to come to resolution, but it looks like the resolution is going to be like not in our borders, which I find really disturbing because we're supposed to be this tech and creativity hub. Does it shift the balance of power? Like, for instance, one of the things I was really excited about early in crypto was FTX's German stock trading system, right? Which, put all the other FTX stuff aside, was still really cool. It was the closest we got to truly tokenizing the equity markets with a bunch of hacks to get around regulatory hurdles here and there. It was a brilliant exploration. I worry we're never going to have that kind of exploration in the United States market.
You could not explore and go that far. There's no doubt. And it is sad when I see, the United States next to North Korea as banned from using a decentralized protocol. Like, that seems crazy to me that we're on the same list with some of these bad actors. And so there's no doubt in my mind that we need to find a resolution that gets a sandbox that doesn't move all this innovation offshore. I'm hopeful that whether it takes an election cycle or a change in regulation or a change in regulator to figure it out, we will find a way that America is not going to be left behind. I'm just too bullish.
I hope so. I love your enthusiasm. I really do. How are you seeing major institutions, wealthy families actually approach the digital asset space?
One of the odd things of coming from the fixed income market to the crypto market, people think that's a huge leap. But in a lot of ways, there's similarities. There's many families that were comfortable buying their own bond portfolios and not hiring and buying a mutual fund.
Right, people bought their own bond ladders.
Forever. Yeah. And they didn't need to pay you to do it. And so in crypto, it's a highly self-directed and self-owned market. And so what you have, which is very different than other asset classes, advisors, clients are going off balance sheet, if you will. The advisor, you handle most of my assets, I'm going to go invest in this on my own. And so I think that's led to an odd place where the clients are kind of stranded on their own, playing with assets, not having a plan, no risk management, not understanding tax loss harvesting. Their assets are held away from the advisor. The products, it's no failure necessarily of the people launching them. To your point, they're trying to contort themselves into a regulatory regime that allows these products to exist in some fashion.
Right.
I think Grayscale Bitcoin Trust is a really fascinating project. Multiple billions of dollars in a known flawed vehicle. But to me, it also showed how much demand there was for the vehicle, even everybody knowing
40 billion in inflows, I
to
think,
get
is
it.
the total.
And so it's not like everyone understood what was happening. They're disclosing it. They're saying, we're not an ETF, we're not an open-ended fund. You can put Bitcoin in, you can't take it out. So that's been well covered, but I'm still impressed with how many people are looking for a vehicle of getting exposure to the asset class in the right way if something came around.
And you guys are, your work here at Canopy, you're sort of stepping around the edge of that and providing more of a custom solution.
So Canopy Capital is building a digital asset management firm. So separately managed accounts, if managed correctly under the SEC's purview, is a way for an individual to gain exposure with a professional investment advisor making buy and sell decisions. To me, the SMA makes the ideal vehicle for digital assets and a way for advisors to actually outsource a skill level they may not have or may not want to have. Crypto is a 24/7 volatile market. As a professional investor, I want to build my own quantitative tools to trade this and to watch it. In the middle of the day, Bitcoin just moved on a rumor that the United States was liquidating $500 million of Bitcoin. Who knows if the rumor was true or not, but there was a moment where there was just a flash sale.
Right.
That happens once every couple of years in the equity markets because of exchanges and circuit breakers. In crypto, you really need to be watching this a lot more closely.
It's part of breathing in crypto. I've traded just enough crypto to realize that those moments are just part of the game, yes. And I get that. So it does make sense that this is the kind of market you want an actual human being paying some attention to. The gating for that, though, is pretty high, right? I mean, now you're an accredited investor. This is not the average $500,000 net worth client is not going to come to you through an advisor to get an SMA. It's going to be at a much higher wealth level. Part of the reason I hate that so much is that seems very antithetical to some of the ethos of crypto in the beginning, which was really about access and democratization.
I totally hear you, and I think that the ethos is still there. I think it's a time horizon issue. If you were building because if you were building an airplane or if you were building, drugs or financial products, so I would tell people, I remember in 2007 when people were trying to launch the craziest things, CDOs of municipal bonds levered on all sorts of stuff. And people were mad that we weren't moving fast enough.
Right.
And my instinct was like, look, guys, if you get this wrong, there's people's health, they care about that, but their wealth is pretty up there. And so you can't just try something and see if it works. Now, crypto had this move fast and break things. And that's fine for the ethos of, play on your own and accountability. I love all of that. However, if you're going to merge the best of crypto with the traditional financial world, you're going to have rules. And to me, starting with wealthier investors is a good place to start. As much as I dislike the accredited investor rules, and I wish those were, if I got to the root problem, I'd say, how do we define accredited investor rules at all? at least we're starting with people and trying to prove that it can work. Because I do think that over time it will open up.
Yeah.
I do believe there will be more financial products. I do believe people will be able to go on chain without having a JP Morgan account or being pre-approved. But we're going to need to build resilient systems that regulators are comfortable with. If not, what's going to happen is, because when you don't have that, what we learned was the beauty of a deregulated space is everyone gets to try lots of things.
Right.
But it's also ripe for scammers. You're going to see the same thing. Just like you see people selling annuities to older people or some other
Denver
thing
penny
that
stocks.
I hate. I hate all that behavior. It's not a crypto thing. If there's money to be made, bad people are going to show up.
There are charlatans in the world.
There are. And so what I want to see is companies get built that do this the right way, that understand how to build financial systems and products and services that people can begin to get comfortable with. And I think as we see that, then we'll open it up. I remember stories of when money market funds were introduced and bankers yelling heresy that there was going to be a bank run. How can we let these evil money market funds undo our power over interest rates? Well, it took a long time, but money market funds offer higher interest rates at lower fees than what banks do.
Right.
It's a great product. It did not, we take it for granted now, but it did not just come out of thin air. It's usually a battle. It's usually a fight because someone else is making money or some other regulator has power, and it's not going to be an easy thing. I'm optimistic, but it's going to be a hard-fought battle to get it into everybody's hands.
What are you seeing that's cool and is giving you excitement and hope right now in the projects that you're looking at?
I think the area of brand adoption is the most intriguing to me. Coming from finance where you used to dollars and cents, making money, finding opportunities, and edge. Brand is so much more human, of connecting with someone and finding a reason why they're loyal. My wife loves Starbucks and Starbucks rewards, and that whole application, it was a bit gamified, but it just became a much more, when you go to Starbucks now, how do you order your food?
Yeah. My wife's the same way. It's all on the phone.
It's just on the phone. No one's even in line. You just go over and pick it up. And so to see Starbucks adopt Odyssey and start using NFTs on Polygon, to see Nike really committed to building a longer term plan, I think the thing that excited me was every time I thought about areas of passion, stuff I like, music or sports, is that what if you knew who your fans were, but in a different way? So I think one of the things that I railed against on the personal information side was I grew up in a generation where we were on Facebook and we just kind of accepted. I would say this to people and they would hate this. Of I just assume all my data is out there.
I'm the same way. There's no way I've got it secure enough. I guarantee it.
I wish I did, but I didn't even think it was an option to retain my rights. It's like Google, I use it, and Facebook and Twitter, and everyone has all my information, and then these advertising companies sell it. And so the idea that the brand and the end consumer could have a much closer relationship, whether that's the small startup trying to break in or the big company trying to understand something. Think about anything that you're extremely passionate about. You would be more than willing for that company to kind of be let in and be like, I am a super fan. Those are the people.
I will let you know that I am a super fan. Yeah.
Anything.
Dude, we can't. It's literally on the wall, right?
Yeah.
Bored Ape Yacht Club was, to me, that first express brand for brand's sake.
Yep.
And it was, the passion was really powerful, right? And the fact that you now have an analog picture on your wall of the digital NFT that I know you've got in the wall. It's probably not in this room. It's stored somewhere far, far away. But without without a regulatory rail set for the value exchange, how does that stuff live? Because certainly you could imagine a non-dollar NFT world where things weren't traded this way, where people had acquired tokens in a system through some means other than converting a USD into it, and it became a closed loop. We aren't quite there yet. So how does this kind of system evolve while we're still trying to figure out whether or not an ETH is a security?
Yeah. Well, so I think you got into crypto a lot earlier than most people. I think NFTs represented a huge adoption and introduction to the entire asset class and space because they don't understand, why do I want to buy ETH? Or they're not reading, most people might not have been reading white papers, but they bought the basketball cards, they bought a CryptoPunk, they bought Bored Ape Yacht Club. So I think that, human nature doesn't change, even though the structure of an asset class will change. I always find this funny. People would say, why did you buy a picture, a digital picture I can just copy and paste? And I'll look down at, some young Wall Street banker and I'm like, why did you buy a black Submariner like everybody else to tell the time? Why do you have an expensive bottle of wine that a sommelier in a black kit says
shoes on?
Why do you have nice shoes? Why do you have a car? People are passionate about luxury goods, and they're passionate about showing their status and identifying with a group. The Bored Ape Yacht Club specifically kind of became this zeitgeist thing that I'm on the edge of the space looking over here when nobody else is looking. And as silly as you might think this is, why is this any different than all the other stuff we buy? And so this is not the version of democratization of finance. This is not a bank account for the unbanked. If anything, I thought it was a really funny experiment, an interesting thing to play with. And just getting involved in it, I keep it more of a reminder of just pushing yourself and not feeling comfortable and saying like, I'm not going to explore this. This is stupid. I'm not going to look at it.
Well, I mean, one of the projects I found out about, I think listening on your show at one point, is the artist who painted a bunch of analog art, put it in a vault, and then there's like a time lock. Yeah, thank you.
Yes.
Like that to me has been the best part of crypto writ large, has been the exploration of these boundaries around things like identity, ownership, intellectual property, fair use. Like that's ripe territory for innovation and restructuring. And now with the introduction of some of the AI stuff, where now you've got, Grimes singing on songs that Grimes is not on and getting paid 50% of the royalties. Like that starts to me to seem a lot like this, where, okay, Grimes is effectively NFTing her voice and then making that available and has a way to track it and use it. Do you see other areas where that might crack open? Because I know we all got obsessed really early with things like real estate transactions and trust circles, and which are still all very true, but now seem much farther away. What's going on in the cultural side that you think we might actually be able to like play with and get into without it tripping up Gensler every 5 minutes?
You'll see membership rewards, forms of clubs that allow people to connect and share, either benefits or perks. The AI thing is super interesting. I've said before that like I don't like the word AI and crypto in the same sentence because it just feels like you're moving from thing to thing. But they're really
no, I don't think that at all.
No, I know.
Crypto, like fully developed crypto rails, become the motive operandi for an AI. Like if you wanted to interact with the real world, that's how you'd want it to interact with the real world, because you can trace everything.
Exactly.
And you can assign ownership, and you can also programmatically do things with it.
Yep.
None of which is true for fiat or any other asset. So to me, the connection is just 100% logical. Also a little scary, but like very logical. I'm wondering like what's playing around in that space.
Well, I think what happened was the reason why it fired up a lot of people is twofold. One, there's technical talent on both sides that's interested in similar problems of using computers in a certain way to manipulate data. The second point was when I said that I grew up in a generation where we just gave up on our data, the same questions being brought up again. What do you mean you scraped the entire internet? What do you mean you scraped my entire catalog? Do I have any rights to that? I was just doing an interview with an IP and patent lawyer just talking about this. We met with people from Warner Brothers about the new language they're putting in their documents of how do you trace this and say, what Grimes is doing is very front forward and trying to say, I want to try this. I want to see where this goes. But other artists are saying, no, like my lawyers are trying to lock this down and say, you can't use this. How do you tell a machine not to scrape information?
I think that's the part where I think that is quite reasonable. And then you start applying that to, Drake spoofs and the AI Grimes and all that stuff. Those are legitimate concerns, but does crypto give us an answer? Is that part of how we start tracking provenance?
I mean, I think you can track provenance. The question is to what ends and what are the rules of the road here, what you can or can't do. I feel the same exact thing. I probably had to write one of my speeches in your voice to see what would come up like. And so I think it's an amazing technology and it is very exciting. I think ChatGPT is amazing because it exposed people to something they hadn't been exposed to. I think that's one of the consistent themes. Can crypto solve it? Sure, there's parts of crypto that probably are really well suited for provenance tracking, for NFTs, to say this is the piece of data that you want to use. People were playing with that. There was gaming companies that had thought about this, about putting AI NFTs before ChatGPT was released. That's one of the parts of the frontier is you find, although there might be scams and charlatans, you find some way into the future people who you're like, I don't know if you're completely pulling my leg or if you're serious. I remember it was probably 2 years ago, I was at dinner with a friend who said, I think we're going to put AI in NFTs. I'm like, what the hell does that even mean?
Yeah.
Like, what is it? What are you saying? And I don't even think he totally grasped what he was trying to get to, except to this point of like, can you store data? Can you store language? Can you store different things that would allow people to track it? I think people are definitely going to play with it. Obviously, there's lots of startups raising money in this space right now. And it'll be interesting to watch the space grow.
I mean, one of the things that hit in ETH really early, it was people starting to develop smart contracts for various purposes, was that problem of finding known truth, which is obviously the same problem we have with current versions of AI we're all playing around with. And so this sort of idea of accepted oracles for certain protocols came about, which to me was one of the most exciting innovations because I'm an idiot and I like the little nerdery in the middle, that idea of anointing certain oracles as viable external data sources of, known sources of truth. First thing I thought of when I started playing with ChatGPT is like, can I just connect this to a smart contract that will tell me with guaranteed certainty that I'm only asking SSRN databases, or I'm only asking, Wolfram Alpha, so that I get the chemistry right?
Yeah.
That seems to me like the kind of thing where there's got to be a bridge there that's cool and that works.
When people saw smart contracts, or they think about the data problem, it all kind of depends on what your background is. So I don't think people appreciate how much a financial services firm pays for what we call oracles or data. Hundreds of thousands of dollars to know everyone
just
to know
get the tape.
The same
just
price.
To get the tape.
The same price, right? And so I don't think people totally appreciate the amount of money spent on, when you say like getting to truth, it's such a hard thing to get to something that we're all believing is factual. Where did the S&P close at 4 p.m.? And how many different ways can you pay for that to like gather that information? Right. And if I ask you to do it right now, maybe you're gonna go to Yahoo Finance and maybe you're close because they're releasing that data, but it's really hard to go any instrument beyond that. How do you know a Rolex is real? How do you know that a bottle of wine is real? How can you track anything? So I started to think about where were areas of authentication, whether it's truth of information, like financial services, and people trying to prove data that we can all point to. I think that's an amazing. One of the coolest things is that they're creating essentially contracts, or what we would call derivatives, but they don't want to call derivatives because of the security law.
Right.
But a derivative that right now, if you write a derivative, we have a lawyer and you have a lawyer, and then we have a separate lawyer who agrees. Like, what do we mean when we said this is the price we're going off against? They're creating contracts that are looking at another computer's price and settling instantaneously. A lot of the stuff that, whether it's the financial rails or retail consumer goods or moving into areas like AI, people really want to test this. And I think that the further you are away from the financial area, the more likely you are to play with it. However, I actually think the financial area is the most ripe. And what I mean isn't just managing digital assets. I mean, why is everyone paying so much money to trade a bond, to get data, to get a mortgage? Why is the 30-year mortgage rate that we trade in the markets 1% to 2% less than what the mortgage is on your house? Because there's a tremendous amount of middlemen that are taking fees. So I'm not even worried about getting absolute truth. I was just worried about, like, could I get data from one point to another and remove all this repetitive data storage, capture, double reconciliation, triple reconciliation that leads to a tremendous amount of waste.
But we've also seen that those things can be very important, right? I mean, some of that having things move slowly has been like an immunological layer on the system. I mean, one of the issues with bank failures we've seen is like we calibrated the system for a time when people only went banking during banking hours. Lo and behold, people don't do that anymore. And so now we end up with these overnight bank runs that were literally inconceivable 20 years ago because the rails wouldn't have allowed it. Now we have that issue. I worry sometimes that in our rush to disintermediate middlemen and squeeze out the cost, sometimes those gaps exist for a reason. Like, I'm not a big fan of T0 equity settlement because I know how much breaks in the overnight continuous net settlement model, and clawing that stuff back in a zero settlement environment is quite difficult. So like, how do we balance those out? Some of those systems exist for reasons.
So in the bond market, you have T+2 settle. You have T+3, and they're trying to get it faster. And I think what people don't understand is there's trades for hundreds of millions of dollars that are wrong. And what happens is, with that size of money, there's no system, there's no scale, even if it was T+0. So imagine on the day of settle, it's essentially T+0. So I said I was going to do something, and then 2 days later we settle, and the money actually moved.
Yeah.
But the trade was wrong. You know what happens? Both sides call each other, and they talk about it. Even though you can have a final settlement layer that's for most of the time extremely convenient and a place to process truth, you can also unwind. We will and need to find ways that we can unwind trades. Now, for the retail participant operating on a crypto network, that's not how this works. It is immutable, and once it happens, it's gone. But it doesn't mean that just because immutability as a final state of settlement, we can still have systems and business processes that are on top of that say, let's unwind that. If you're trading, if we're in this hypothetical example, to me it ends up being size. That even though there's a regulatory environment, with the letter of the law you're going to is that if we seek different problems between us, we're going to seek mediation. It never is that. At the end of the day, again, the human nature part doesn't change. It's a relationship.
Right.
Is Goldman not going to trade with Vanguard because there was a bad trade? It's too important. Now, look at a regulated system like the nickel market. How does that get shut down?
Well,
but it's the same thing. It's the size of a participant. If the size of the participant is so large to break the rules, such that all the other players should be like, How exactly are we going to undo
Then we
this?
change the
That's a
rules.
steeply
Yeah.
regulated
Yeah.
market, right? And so what ends up happening is he who has the most coins starts to make the most rules. And so in the financial markets, just because of crypto's immutability doesn't mean that they can't find a process around it. And the reason why I'm bullish on it is I don't believe it will be like, I don't believe that we're going to see a day where, you have Bank of America trade with Jane Street on ETH and there's no regulatory oversight of what's happening. I don't believe that. I think one of the interesting claims has been, and it's hard for me, is that these two worlds are going to be built completely separately. They're never going to merge into one. I just don't buy. I don't believe that crypto is an anarchist, take down the government.
I want them to merge, right? Like the bridges is where everything interesting happens.
But it's going to be a fight between both sides because there's people on the crypto side that want nothing to do with this system. There's people on the traditional side that want nothing to do with this system. And I think that the average American would just like lower costs and better goods and services. And so that I believe this is probably one of the best answers for a lot of solutions.
Yeah. Well, that's a positive spin on it. That's definitely a positive spin on it. Well, it's been really great having a chat. Thanks for joining us, Eric.
Thank you for having me, David.